What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benisaki and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. All right, everyone, welcome back to Real Estate Investing Demystified. We're excited about the show today.
We are excited. Our guest today is a yacht captain, and like an actual yacht. A lot of people call sailboats, like the similar ones we have back there, they call it like yachts, but a yacht, like we're talking about luxury, one of these insane yachts that you see on TV. I had a pleasure on being one of those yachts years ago.
And how was it?
Oh, it was just incredible. Yeah, it was different level.
I believe you told me a story. You had you asked for breakfast and
anything
he wanted.
He
was ready to go.
Yeah, I'll tell you guys a quick story. So I was invited to go on this yacht. I was asked to fly out to London. So I flew out to London. We jumped in this motorcade of these cars, went to the private, it was an airport, but it was a private entrance in the airport. I've never been to the private side. You don't go through where everybody else is going through. We jumped on a private jet, flew to a city in the south of France called Perpignan, and from there we boarded this yacht called Fathom.
Okay, yeah.
And then we sailed from there so I was given my own quarters, my own room, and really nice. And then like actual windows, you can see the water like right there. And then we sailed to Ibiza and spent 8 days there. But I remember waking up in the morning, I was an early riser, and I woke up and one of the staff came up to me, and you can't wear shoes on a yacht. Just like teak wood on the floor, so you can't wear shoes. And the girl came up and she's like, oh, would you like some breakfast? I'm like, sure. I'm like, do you have a menu I can have a look at? She's like, no, like,
what would you like?
What would you like? I'm like, we just make whatever you want. I'm like, all right, I want some pancakes with blueberries. I want some basted eggs. I'm like, not a problem at all. And
there was served
she made a breakfast for us. There were a couple of jet skis. There was a tender that we could take anywhere we wanted, basically at our disposal. But it was
luxury experience.
It was incredible. And every time we left the room got touched up. It wasn't once a day. It was every time we left. So it was a truly incredible experience. Also, like other yachts as well came when we would dock. We went to this little island by close to. Actually, I have a bracelet from there, gold bracelet from that island, which is an island close to Ibiza. Formentera it was called, Formentera. Okay. I remember having this fish that was under the salt, the way that the Spanish do it. But then all the yachts that were there, they actually took the tender and they would meet, they talk to each other, their friends, the people who
go on each other's
yachts. Yes. So and that week that I got to experience, that 8 days I got to experience, it was just a part of these rich and famous lives. They actually the next couple of weeks, I think it was in early August that I went on the yacht. But then the following week, everybody was going to the Formula One in Monaco. So that's what everybody was going there. So anyhow, it was truly an incredible experience.
He took his yacht to Formula One
so the yacht would go there, but he didn't spend his whole life, all year there. But I'm just saying that this kind of this festivities continues all year long, and billionaires and these wealthy people come and join as they can. But there's this circuit that they go to all these top events around the world. But our guest today is going to shed some light into the world of yachts and also real estate investing and how those two worlds can and are merging. So maybe you can tell our viewers and listeners a little bit about our guest.
Would absolutely love to. Today we're joined by Scott Kidd. Now, Scott is a licensed USCG master with over 25 years of maritime experience, specializes in new builds, refits, and yacht management. His expertise spans in IT mechanics and heavy equipment. He has cruised globally, including the Mediterranean, Gulf Coast, Great Lakes, and South China Sea. Scott is a legacy mentor, multifamily real estate investor in several states, and runs the Yachty Real Estate Investors Meetup Group in Florida. Welcome to the show, Scott. We're really happy to have you here today.
Welcome to the show.
Well, thank you so much for having me. I'm really happy to be here. It's my pleasure. Always love catching up with people and talking about multifamily real estate and boats, I could sit here and talk all day. Sometimes my wife and my kids, sometimes they have to shut me down.
Sounds like we're here to listen
We're
to
here
the
to
story.
listen.
Yeah.
Yeah, Scott, if you can, let's just start off by telling us about a little bit more about your background and then how you got your start in real estate, please.
Okay. Well, I've been doing yachts for about 20 years, and it kind of came to fruition because I was in the IT business before, and I had business, and was forced to close down, and I got laid off. It was kind of part of the boom bust in Austin, Texas, and I was back in Jamaica, which I'm originally from. My dad's Jamaican, my mom's American, so I was back there, and after we closed the business, I was doing some things, and a friend of a friend asked me if I wanted to work on a yacht at the Fort Lauderdale Boat Show, and he asked me if I knew anything about boats, and I said no, not at all, and I was really in the negative there financially, and I said, well, I'll give it a shot. And he said, well, yeah, just get here. So I borrowed the money for the ticket, and my friend Merrick gave me some money, some cash in my pocket. I landed with about $20 to Fort Lauderdale. Didn't really know anybody in Fort Lauderdale, but never looked back because it ended up being a passion for me, and I really love it. And and that ended up, you know, wife and kids, family, and everything. It's been a great, it's provided a great lifestyle and family oriented, finance and everything for my family, and it's grown into opportunities in multifamily real estate, which I kind of happened on as well. Many years later, I friend of a friend was we were at the beach having some cocktails, and he told me about he had bought and sold a 46 unit apartment building in Houston, Texas, and he had made a large sum of money, and he only did it in a few years. And I said, well, you can do that. And he said, yeah, you can do it. Anybody can do it. I can't. I did. So can you. And I kind of was my light bulb moment, because I started, as like a lot of people, I bought my first house, for our family, and our family was getting bigger, and we bought another house, rented that one, and then, you know, we went from there. And then flash forward many years later, I didn't know that these options and opportunities were available in multifamily real estate, commercial real estate. Even though I'd worked as a captain for a guy that was a real estate developer, I just thought it was, wealthy individuals inviting each other and into these deals and putting them together, which it still works that way in some ways, but
But
you know,
historically, it was like that. Before the
yeah,
Jobs Act, it was more
yeah,
for a selected few.
definitely.
It wasn't kind of to the masses. You didn't have the Grant Cardones of the world
Yeah.
talking online and raising hundreds of millions of dollars.
Yeah, and the 2012 Jobs Act, that was great. It opened it up. I wouldn't be doing what I'm doing without it, because it was, and even still today, the probably there's still a lot of deals that are still invite only, but a lot more deals are becoming more open to the public and available, and people can learn so much. I mean, I've, learned so much about all of this just by a lot of word of mouth networking, and
Well,
it's
every
something
five
to.
was every 506B deal is an invite only deal technically.
Yeah.
Yeah.
Yeah,
Technically,
So
yeah.
technically, yeah. It's who and what people know you for. And it's been a blessing, because there's just the sky's the limit. There's so many things. I've met so many people that are doing so many great things, from being on the yachts. I didn't know that was a career. I didn't know that multifamily, I could get into it.
yeah, but let's talk about that.
Ultimately,
Talk about your acumen, where you're told by a friend about this option of the yacht. It's nothing to do with being a captain, but it seems like you worked your way up the ladder to get to that position. Touch on that a bit, because also in the same way, you kind of pursued the option of real estate investing, multifamily syndication, real estate private equity. Seems like you're a guy that finds an industry and then works his way to learn about it and be successful in it. Talk to us about your success in
y-
the yacht world.
yes, that's very much the way it is. I was lucky enough to have the first person I worked for was a great mentor of mine, and he showed me all the ropes, so to speak, with everything. And taught me all about, the charter business, yachts, and introduced me to a lot of people. And, it was kind of trial by fire. Had to learn by doing. Made a lot of mistakes, but I learned from them. And, one thing that I always say, if I were to do it over again when I was younger, I wish I would have failed faster. That way I've learned more, learned quicker. And it was the same thing with multifamily real estate. There was some things, you don't know what you don't know, but until you're exposed to that person or that deal or something, you may not have known that that's the way it works. Because I did a lot of research, and I'm constantly researching. As you know, in any business, you have to be informed, and you have to know what the market is doing, know what, and real estate is so local and so specific that you really have to drill down heavily into the area that you're working on. And you have to get there first. So you have speed of execution is very, very important. And that's the thing that's helped me a lot from the yachts is every one of these wealthy individuals we work for, they want everything done yesterday. That's the speed that we need. We need to anticipate that what they're needing and what they want before they even think of it, that kind of thing. And if they need it, we need to anticipate, make sure it gets done. And that's been very helpful, especially in multifamily. You have to try and see what's going to happen and be very proactive. Granted, there's things that you're not going to anticipate, but if something happens, you need to be able to execute quickly.
Got it.
Absolutely.
Got it. Go ahead,
Scott,
Ava.
I'm just wondering, what year did you become a yacht captain? And then I believe you're still a yacht captain. And then what
Yes.
year did you pivot into multifamily when you had that conversation with your friend there
Um,
who
um, I I became a captain in 2002. And became a captain in 2002. I started on in 2000 on professionally on the yachts, and then multifamily real estate. I was roughly 2020, a little bit before, maybe late 2019. That's kind of roughly the timeline and becoming a captain.
No, I want to touch on a point. You're on these yachts, you have these clients who are obviously mega rich who are there, and they all come from different, I'm totally guessing, but diverse backgrounds, and they've made their riches in different industries. Having obviously been curious about how your clients have made their riches, what was it about multifamily or real estate that was kind of the roadmap to success that you decided to go down on and not any of the other things these people had done?
Well, I saw, the main thing was, I understand real estate because, I have to have a place to live, especially multifamily. And I saw it being attainable, mainly because my friend did it, and he told me, he said, "Hey, you can do it too." And it's everyone needs to live somewhere, and there's just so many programs that actually government programs that support multifamily, unlike any other commercial real estate. And, I'm still a yacht captain today. I'm actually in New York on the boat right now. But, and all of these people, a lot of things that have made them wealthy, not necessarily the business. What I've noticed a lot of times, it's they found a niche, they focus on one thing, and then also they're very, I want to say, compulsive, or obsessive, things that we would probably say, "Hey, well, tomorrow's another day. We'll we'll tackle it tomorrow." They will stop at nothing to solve that problem. They will just keep going, and they're very quite tenacious in just in spirit, because it's going to bug them. They're not going to sleep anyway,
right.
and until they solve this problem or get this done, and I've found that that's a very common trait with a lot of these guys.
Yeah.
Right, right. And I was gonna say, Scott, like, being a yacht captain, you're surrounded by these, wealthy people. I mean, in multifamily, I mean, we all know that we partner, a lot of the times we partner with accredited investors, right? So we're always on the lookout to meet high net worth investors and so forth. Do you ever find yourself having conversations with the people you meet and talking to them about your business and then them possibly being intrigued? Like, I'm curious about that.
Sometimes, but it's usually the people that are the clientele or the owners of the yachts, they have like it's similar to like I would say a family office or a private equity group.
Yes.
They have a group or they have those guys and they're
Investment committee
Committee.
kind of
yeah,
concept where they
they're
have
not
people on their
necessarily
team.
yeah, they're not necessarily the one that makes the call on that. So they might have Mike over there in charge of their family office. So, and it does come up sometimes. Actually, the guy that gave me my first captain's job, he was a real estate guy, and he talked to me extensively about real estate and how he did it. And he's since passed on, but he's a great guy. I mean, he he really told me a lot about. I mean, he gave me some advice on buying my first house and stuff like that, and
But
things like that.
Grant Cardone says that is the biggest mistake to buy your first house, where literally the middle class of U.S. and Canada who built these two countries have done it by buying their primary resident and having most of their money in that.
Yeah. I wanted to pay for my own house. So, Grant Cardone has his way. He's got probably, I don't know, a multitude of revenue streams that can cover his rent wherever he wants to live. So it's easy for him to say that. But for me, I'm starting a young family and I wanted to, I grew up, you buy your house, you don't rent, and it did springboard me to, I bought that one and moved into another one and it helped me progress along the way. I wouldn't have had the money to get into multifamily had I not bought those. Had I
Not
just
only
saved.
you, yeah, not only you, but I'm talking
Yeah.
about
Yeah.
two generations in the U.S. and Canada that I'm very familiar with have made not
Yeah.
only money for themselves but also their children and grandchildren because they bought their primary resident. I mean,
Yeah.
it's
Well,
That's so true.
and you look at any time anything goes bad or anything happens, it's the people who own the assets really they're generally can ride the wave out of there.
Yeah.
If you don't, you're stuck, succumb to the large inflation and everything else. And it's, if you look a couple hundred years ago, the people that were deemed to be wealthy were the landowners.
They always are.
Yeah.
Just a couple of quick questions just for our viewers and listeners to kind of get a better understanding of somewhat of rapid fire questions. But
That's okay.
as far as kind of the yacht industry, we want to kind of have a better understanding. So when you get hired, do you get hired for one particular boat, or do you get hired by an agency that kind of puts you as a temp captain on multiple boats? How does it work?
It depends on the job detail and the job description. You have, private yachts that are strictly private where you work for one family, and then you have charter boats that are, possibly like the one that you are on that possibly chartered for the week or
No,
two.
the family owned the one that I have. It was a
Okay.
Chatwell family, are good friends from New York. They were a hotel magnate. They sold most of their
Oh,
hotels
okay.
now. Are my good friend Vikram, but they would actually, because they were in the hotel business anyways, they would actually charter the yacht out. But I think they were just
Yeah.
breaking even. It wasn't a profit machine. It was just that they get
Yeah,
to
they
use it.
don't, that's a little known thing that most of the public don't know. They think, well, the house, the boat, the yacht goes out for $4 or $5 million a week. You think, wow, it's a lot of money. It's going to make some money, but the carrying costs are so high
So
that
high that it's
generally you are lucky if you make 30 to 50% of the annual costs, and you generally offset maybe the crew salaries or something like that. But generally the yachts, they're potentially a write-off or something for that person. And the person that's the billionaire, they might only use it maybe a couple of weeks a year. So it's more useful for them to keep it moving, because if it just sits there, it's going to deteriorate. It needs to be a boat, like a lot of things. If you don't use it, you lose it.
Yes, no, that's true. And then if you did get a job with a family and you're sailing for them when they have it, but then you would I'm guessing you would also sail when they're chartering it. Does a captain stick with that boat in most cases?
Yeah, generally it's a full-time
Got it.
operation. It's a 24/7 operation. The program I'm on now, there's actually two of us captains. We rotate 6 weeks on, 6 weeks off. And because we went when they purchased this one a couple of years ago, we went straight up to New England, the Caribbean, then we went to Florida and then up to Alaska last year. And then now we're back on the East Coast with Florida, Bahamas, and then
Nice.
now we're up in New York, New England. So we haven't stopped. So that's why there's two of us, and we manage everything from soup to nuts. There's two chefs, there's two engineers, there's multiple crew because those positions are high demand, so they have to rotate as well. And when you start looking at all the little nuances and everything, it's a lot of money goes into it, and it's really a large loss for this particular client. But it's generally, do you want to spend it on your boat and have a good time, or do you want to spend it on taxes? You,
Yeah. Yeah.
it's
Got it.
it has to be a passion for someone, or that because it's a very small percentage and it's a very unique industry. It's
100%. Some more context. So just for again for us to get an idea, if you are chartering a yacht, let's say a 6-bedroom yacht in the Mediterranean for a week, what does it cost for something like that? It doesn't have to be like it's not like mega yacht, but let's say
Like,
say 150 feet, 200 feet, something like this.
I think so. Yeah.
Okay.
The Fathom yacht. How? Let me see how.
I don't know. I want to say that one is bigger. 1,000 euros to $1 million, €1 million a week, depending on the build, the newer, the style of the boat, but possibly more, up to 2 million, depending on the vessel.
That's all in. That's for the crew, gas, everything.
Well, no, that's just for the boat. The fuel and the fuel, the dockage, whatever you're having, your food and drinks and stuff like that, and whatever excursions and stuff like that. They usually have, based on say it was $1 million a week, they have what they call an APA, which is an advanced provisioning allowance, which it's usually nowadays it's about 30%. So that would be an additional 300,000 that would cover the fuel, the the dockage, the food and drinks, and any other incidentals that you might spend while you're there. Possibly other charges for internet, depending on where you are in that area, might be an upcharge,
that is a lot of
Yeah.
money.
Yeah.
plus you're, in addition to that, you're looking at usually 15 to 20% gratuity for the crew as well.
Yes.
Oh,
Yes,
that's
for
right.
sure.
Oh,
Now
wow.
let us ask you something, kind of a follow-up question here. If, or I should say, when you could afford to have your own yacht, would you own one? Is this something that a lot of people that are, in certain industry,
I
would
would
you buy
not.
your own yacht?
I would not, just because I know that how much goes into it, and also my wife is a charter broker, so I'd want to keep her working.
Fair enough. But if you are going to buy a yacht, what kind of yacht would it be? Like, what's your favorite yacht that you've seen?
Mine would be a Fed ship, without a doubt.
Fed ship.
Fed ship built in the Netherlands. It's just a great group of guys that build yachts, and they're built in all around the Netherlands, and they've they've done very well by me because I've run one before, and they're very helpful, and they support their product. They build high quality, and they support their product after. There's nothing you couldn't call them about. They'll give you a multitude of product support, and it's a chance also to go to the Netherlands.
Yeah.
One of my things before I hang it up is that I want to build one like the one behind me on there. I want to build one like that as a project manager, and run it for a little bit.
Wow.
Okay,
Amazing. All right, let's
It
bring
sounds
it.
quite desirable to be part of the crew, but it's probably a lot of work. I mean, because you have to go to all these,
Yeah.
locations and stuff, but it's probably.
Not for the captain, but yeah.
Well, me, I have to. I'm the dad, the brother, the manager, like they say, the problems go up and downhill. So I have to deal with everything all day. So mine is more of a mental game. And when we're on charter and stuff, we're at 18 hours a day.
Right. I
Got
bet.
it.
I
Got it.
bet.
Okay, let's switch the conversation back to
Let's get into multifamily.
multifamily, a
Yeah.
bit more investing. I don't want to, be a little bit scarce for time, but yeah. So multifamily, friend of you told you about it. You get involved. Did you ever get coaching in the process? Did you get mentoring
Yes.
coaching? You did. You got
Yes.
some
I'm
mentoring.
doing coaching now. I've done quite a few different mentorships and coaching. I've also did some personal development and business coaching, which I joined back onto another, it's a group coaching by the same coach, Dr. Jamil, a great guy. And I'm do coaching also with multifamily octane group. And I belong to a bunch of masterminds, Raise Masters, Fund Launch, Michael Blanc, and it just gets better and better. Putting yourself around all these people
But that's a bit
that have
costly,
done
no? Scott, that's a bit costly, no?
it can be, but it could put you into the next deal that covers all of it.
Right.
Yeah,
Right.
or at least for me, sometimes maybe I didn't find that deal, but it made me realize that how much more I had to learn and how much more there is out there. That there's just so many people doing so many amazing things. I've never been a pessimist. I've always been, you know, a very positive person, and because what other choice do you have?
Yeah.
Yes.
Being part of
You
this
could,
coaching. Go ahead, Scott. Sorry.
you know, no, if you have an issue, you're gonna lay in bed all day, or you're gonna get up and get after it. You
Yes.
gotta go
Go
for
ahead.
it.
I was,
Go ahead.
I was going to say being part of the coaching programs is great because obviously if you're looking for deals, you can find deals. If you're looking for a partner, usually the coaches help you find a partner. But I was going
Yeah.
to ask you, other than coaching, when you first got into multifamily, did you decide to start by investing as a limited partner, as a passive investor first?
Yes, actually, my coach now, Tate Seamer, I was working full time on a yacht, and I said, well, I want to be a GP and this and that. And he said, well, and I spoke to probably 12 different syndicators, and all of them immediately went into about the deal and this and that. And he was the only one that said, well, you have to make sure that it's right for you. You may want to, so you can learn faster, become a limited partner to where you can see how everything works and then just ask to be involved. And then I ended up investing with him because, he said, well, I don't have to, be involved in all of those things and oversee and see what's happening and learn. And it did help me a lot because I understood how learned what the legal documents are. I learned, what I as an investor, the expectations are, and then I've invested in more. And, as far as my portfolio, I plan to, be a co-GP and LP, get a little bit more of those and build my own smaller multifamily personal portfolio. And I'm starting a fund now too. So, I'll have all those together to where they'll keep feeding each other. When one matures, we spread it into the rest of them. And that's my long-term strategy because everything's a long-term strategy, really.
Yes. Let's talk about that. Let's talk about your vision, long-term vision. You talked about kind of somewhat diversified around the structure you use to be involved in deals, LP, co-GP, fund. Is the long-term vision for your attention and focus to be around a fully functioning multifamily private equity firm where you're acquiring deals, managing deals, have gazillion employees? Is it more about being kind of cherry picking the best groups to partner with and be kind of more opportunistic and versatile? What does it look like to you? That
Long term for me, it is because in about a year and a half ago, I started focusing on just raising capital and investor relations. Long term for me, it is building out the fund and partnering with great sponsors.
Nice.
And because that is not, I mean, although I can analyze deals, a lot of unanalyzed hundreds, probably in the thousands by now, but my skill set aligns more with investor relations, capital raising, and the fund structure. And I already have developed a lot of these relationships with great sponsors that I know and trust, and that way I can be a part of the vetting process and help a lot of my investors and other people I know learn more about it and help them know that these options are available. And if it's my fund, I'm for me with my own money, I understand the risk. I'll take it. And if I lose, I hope that's not the strategy. But if I lose, I know the risk. But if it's the investor's money, I'm much more meticulous, much more careful. I don't want them to lose anything, because
Yeah.
that I wouldn't sleep at night.
No, 100%. Just for me to touch on that, just for, again, our viewers and listeners listening to this, when you talk about this concept of creating a fund and looking for sponsors to partner with, is you create your own fund and then investors invest into your fund. And then you, as the fiduciary, then picks and chooses different sponsors, meaning people who put deals together, a multifamily operator to invest with, or even other asset classes, but you decide where to invest and you can be somewhat versatile. I just want to make mention that pension funds, people managing everybody's pension, family offices,
Mhm.
university endowments, sovereign wealth funds, they do the exact same model. They have a fund, they find operators, they partner with. Blackstone has done that as well. Now they're involved a bit more on the operational side when it comes to real estate, but they also partner with larger sponsors. So this is not an idea that Scott has created, this idea
Yeah,
of allowing investors in his circle of influence to have exposure to multifamily deals, where it's not just an investor seeing something on social media and investing with the first guy.
yeah,
Scott is dedicating his time, vetting multiple sponsors, knowing the good and the bad and the ugly in the background, and seeing who's the right group to partner with.
Yeah.
Which then again makes the best investment possible for his investor. Just wanted to touch on that.
yeah.
Which, yeah, and keep in mind, we CPI Capital, we are, that's not the model we utilize. It's our own deals, and we look for
Yeah,
partners like yourself. But I would say that you have a competitive advantage over us, because as we are focused on our market, which is the Florida market, Tampa, Jacksonville, Space Coast, and what have you, we're hyper focused there. The market might slow down, rents might be coming
yeah,
down, that what have you, the economy might slow down. But with you, you can pivot. You can go and invest with somebody else in Texas, or you can invest with somebody else in
yeah.
Arizona, and so on and so forth. So I think it's actually a better model for the end user investor to have a fund of fund manager, or a feeder fund manager, or a boutique private equity manager looking after their funds through the process that you
And
talk
then they
about.
kind of have a diversified portfolio as well
Yes.
in other.
And it's great that you mentioned that, because a lot of people don't understand that this is the same thing like their self-directed IRA or their IRA that they're doing. They have with their pension fund or their work 401k, they have a guy that manages that, and they're really in charge of that. They can choose where the stuff goes, depending on how it's all structured. But they can also, a lot of them don't know that they can invest in multifamily real estate. And it's kind of by a lot of the fund managers that deal with the stocks and everything else, they don't really push that, because they don't, once the money leaves that fund, it it's outside of there, and they don't get any fees off of it, and it's not under their control. So it's just something that people need to know and keep in mind, that there are other options. If you do a self-directed IRA, you can put it in whatever you want,
Yeah.
you know.
And I
And
mean, with all of the, yeah, go
forgive me,
ahead.
but just to add to that just a bit more is also that sometimes investors think that, hey, if I'm investing with Scott and Scott is investing with CPI or any other group, am I getting diluted? In
Yeah.
most times, Scott comes to us and says, hey, I'm bringing on a big check. I want better economics.
Yes.
Better. In some cases, Scott's investors might even get better economics than CPI's investors would get, because of the power Scott has over. So I'm not just Scott, but I'm just thinking
Yeah.
overall, you
Of
have
fund
that
of fund.
leverage that the investors have. So it's not only access to many sponsors and how kind of that knowledge, background knowledge about all of them, and the industry knowledge, is also the fact that you can actually do better for your investors going through.
And it's great that you mentioned that also, because a lot of people don't understand. Like they're like, well, I can cut out the middleman. You're just, but it's, you're paying for expertise, and you're also paying for someone to negotiate on your behalf to get better returns and a better split, and possibly a better long-term, value for yourself. And then you know, as that there, you're also going to have options. You're not just going to be into that one. You could potentially be into multiple in that fund.
Exactly. Be
Absolutely.
diversified. Great. Thank you so much for that background. And yeah, hopefully one day, as we do better here, we can charter a yacht and sail around the world with Scott.
Well, you
So,
did promise
That'd be
me for
great.
one of my birthdays coming up here that you would,
all right,
that
sounds
you
good. I'll,
would
I'll
get
get
me.
that 500,000.
I'll put you in touch with my wife and she'll set it all up and
All
I'll
Okay.
right.
meet you at the dock and we'll go have some fun.
Amazing, amazing. 100% do that. Awesome. All right, let's get to the next segment of our show. We have just a few minutes here. Go ahead, Ava.
All right, Scott, it's called the 10 Championship Rounds to Financial Freedom.
Oh, uh-oh.
Are you ready? It's just whatever.
I'm ready.
Okay, whatever comes top of mind, okay? Here we go. First question. Who's been the most influential person in your life?
I would have to say two, probably my parents.
Oh,
Of course, of
lovely.
course. Again, take your time. Some of these questions are somewhat
Yeah. Well, that's what
intrusive.
came out quick and
Yeah.
that's
Yeah,
really,
take no, that was perfect answer. But just saying, take your time because some of these questions that make you wonder, what would I do in that
yeah.
situation? But keep going, Ava.
All right, Scott, what is the number one book you would recommend?
Number one book I recommend, the best book of recency is the Go Giver.
Okay, never heard of it
Go
before.
giver. Okay.
What is it about?
Yeah. It's basically there's a whole series, Go Giver Leader, Go Giver Sell More. It's basically just about leading by giving, and you'll do better in life just by adding value and
Nice.
giving. And it's really kind of in a story form about these multiple situations that high level business people are. And it goes into some details and it really makes you think that, you know, you really have to be grateful and have gratitude. And I've learned in my life that the more grateful I am, the more gratitude I have, the better my life gets. And the more things come to me in multiple different ways I never even thought of.
Absolutely.
Isn't that the truth? I love it. Okay, Scott, next question. If you had the opportunity to travel back in time, what advice would you give your younger self?
Fail faster.
You know, Dave Chappelle talks about that, where when he bombed in front of an audience,
Yeah.
was the best experience he ever got, and just the fear was then gone, and he had to go back to the drawing board and do better. But it was that failure that actually built him as a comedian. But no, it's definitely fail faster. No, I 100% agree with that.
Yeah,
Awesome.
that's the one that resonates with me the most.
Awesome, Scott. Okay, next question. What's the best investment you've ever made?
Best investment I ever made. We bought an 8 unit and we ended up put through the ringer there, but we ended up 3x in our money in
Nice.
8 months.
Wow,
Nice.
there you go.
All right. Now, what's the worst investment you've ever made, and what lessons did you learn from it?
Worst investment I made, a shipping container, and I shipped some stuff to Jamaica, and we were selling a few things and buying and selling a few things, and then it did not go well. The store that my partner with, floor got washed out. The container's still there, and I lost the money,
It
probably
happens.
20,000-30,000, probably.
Oh, no. Okay. All right, Scott, how much would you need in the bank to retire today? What's your number?
My number would be, I don't know if I necessarily have a number, but I would more want to have a certain amount of income
Yeah,
coming in
nice.
cash flow, and it's not very much.
Passive income to live off of. Love it. Okay, if you could have dinner with someone dead or alive, who would it be?
I would say Bob Marley.
Bob Marley, you know who that is, right, Ava?
Yeah.
Nice.
Nice. Okay. If you weren't doing what you're doing today, what would you be doing now?
Well, hold on. He's a yacht captain and a real estate investor.
I
So
know, it
something
doesn't get better than that.
something above and beyond that. What would you be doing?
Yeah.
For me, I'd continue doing the same thing. Love being the yacht captain, love real estate. I'm gonna do both of them till I'm done.
There's nothing
Nice.
else you'd rather do,
Nice.
okay?
All right. Let's do
Okay,
it.
next question. Book smarts or street smarts?
Street smarts.
All right. Okay, last question, Scott. If you had $1 million in cash and you had to make one investment today, what would it be?
I would invest in a friend of mine's debt fund.
All right.
Nice. That's a good debt fund. Awesome.
Yeah.
Thank you so much, man. Really appreciate it. Just last thing here. What's the best people can reach to you? If you can say it, you put it in the show notes, but you can say it verbally if somebody's driving.
Yes, it's investwithscottkid.com /free gift for my Captain's pre-departure checklist for apartment investing.
Nice.
Right on. Okay,
Awesome.
Scott, thanks so much for being here with us today.
Thank you.
Thank you guys so much. Really appreciate it.
Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.